Okay, in this video I want to give you a brief about the impairment loss that we face when we deal with the property plant equipment, which is governed by IAS 16. Alright, so on overview you have to know that items of property plant and equipment must be tested for indication of impairment at the end of every reporting period. And you have to know that impairment testing is governed by IAS 36. So, in other words, in case where we have a property plant equipment that we are required to test for impairment, there's no way that we can ignore the principle of IAS 36. Okay, so I want to make it easy for you. In order for you to be able to calculate the impairment loss and to be able to understand the meaning of impairment loss. Okay, firstly, let's go to the example of impairment loss. What is the meaning of impairment loss? Okay, before we go to impairment loss, firstly, you have to know that what is depreciation? Depreciation is a normal loss that we know that this loss is going to happen when we purchase the PPE item. Each and every month we're going to calculate depreciation. So now let's go to impairment loss. Impairment loss is abnormal loss. This is the loss that we didn't expect. So here are some of the examples of impairment loss. An introduction of new technology led to impairment loss. So people who were producing computers, they were not aware that in some other time there might be a new introduction of what? Of laptop, which is going to replace what? A computers. Which means that that was abnormal loss to them. There was a what? An impairment to them, because people were demanding a laptop than what? A computer. Okay, new technology can lead to impairment loss. Then unexpected event such as accident and natural disaster such as flood, that lead to impairment loss. If you purchase a vehicle today and you got accident tomorrow, remember, when you purchase a vehicle, you are expecting to use that vehicle for at least more than 5 years. But if the accident happened, that's abnormal loss. So we call it what? Impairment. Alright, then a selling of an asset is an indication of what? Of impairment loss. There might be a reason. Why are you selling your assets? Probable the assets that you are selling is because the assets is no longer function the way it used to function, or the assets that you are selling to someone is out of fashion. Something that is out of fashion, there's an impairment inside. Okay, so that's what you have to know in terms of what is the meaning of impairment loss. Alright, now let's go to how are you going to account for impairment loss. Firstly, you have to understand what is recoverable amount, because it will need it when you calculate impairment loss. So let's start. What is recoverable amount? This is the amount that you are going to recover after the indication of impairment. For example, if you got an accident and you decided to sell the parts of the vehicle to other people, which means that that amount that you're going to get when you sell all those parts of the vehicle, we call them a recoverable amount. That's the amount that you manage to recover. Okay, so a recoverable amount may come in different way. You can be given that amount of recoverable amount, then you calculate impairment, or they give you the fair value less cost to sell, or with what? With value in use. In that case, you have to pick one. The principle said in order for you to determine recoverable amount, if it's not given, you need to take the higher value between value in use and fair value less cost to sell. You have to take one between those two. Then the impairment formula state that we have to take the current value, which you know that the current value is cost minus accumulated depreciation. Then you subtract recoverable amount. And you have to take note that we only account for impairment loss if the current value is more than a recoverable amount. If what we are going to recover is less, which means that there is impairment, you make a loss there. But if recoverable amount is higher, there is no impairment and you don't account for that profit, because we measure inventory and PPE at the lower cost. You don't measure the profit, you only measure the loss in terms of IAS 2 and IAS 16. Take note of that. Okay, then the recoverable amount that you got after you calculate the impairment, it will be regarded as a new current value because it's the lower one. Okay, then let's go to the example. The first one, let's go to the required part. They said, is it necessary to test impairment loss on this machine on 31 December 2022? Is it necessary to test the impairment loss? Yes. Even before you read the scenario, you already have a mark. Why? Because the principle said that items of property, plant and equipment must be tested for indication of impairment at the end of reporting period. Each and every reporting period we have to test for impairment. It doesn't matter what they said on a scenario. That's the point number one. Then the point number two, you firstly have to read the scenario and support your answer. Okay, Ramos Traders is the company located in KwaZulu-Natal. It has financial year end 31 December 2022. Then on 31 January 2022, the company bought machine with the purchase price of 80,000. Then the machine were installed by 20,000. And they started to operate on the same day, which means that they started to use the machine on the same day on 31 January. Okay, in this case let's use 1 January because I don't have calculator to do pro rata. Okay, on 1 January 2022, and they started to use the machine on the same day. Okay, this machine normally produces 20,000 bricks per month. However, on 30 June 2022, the machine started to have a problem and only produced 16,000 bricks from June until 31 December 2022. There is an indication of impairment on this paragraph. This machine normally produced 20,000 bricks, but now it started to produce 16,000 bricks for a period of 6 months. Which means that there is a problem on this machine. We have to account for impairment. That's the second answer that you have to give on number one. Alright, on 31 December 2022, it was estimated that the machine has value in use of 50,000 and fair value less cost to sell of 60,000. Then in this paragraph, they didn't give us recoverable amount, but they give us true amount, which if you know the principle, you will be able to calculate what? Recoverable amount. The recoverable amount, the principle said we have to take the higher one, which is 60,000 of fair value less cost to sell. Okay, then the machine used the red line method over 5 years to nil residual value. That's the depreciation that we have to do. Then number two, prepare journal entry for the above information. Okay, let's start with the journal. The first journal, we are going to debit machine by an amount of 80,000. Okay, debit machine by amount of 80,000. Okay, then we credit. In this case, they didn't tell us whether it's a cash or credit. You can say bank or you can say payable. Amount is 80. thousand. Then the second one, remember the installation form part of a cost price. We also have to do what? To recognize 20,000. Okay, make sure that you do this journal separate to in full marks. The installation, then you indicate is for machine. Then the amount is 20,000, which means that our cost price in this case will be 100,000. Okay, then the second journal we have to prepare depreciation before we test impairment, because impairment they will need the current value and you can't have a current value without depreciation. Okay, we have to calculate depreciation. They say the machine use straight line method over 5 years to nil residual value. Okay, then our cost price we know that is 100,000 because it's 80,000 plus 20,000. We debit depreciation, then we show the calculation, 100,000 divided by 5, then we're gonna get amount of 20,000. Then we credit it with accumulated depreciation. Okay, in this case then you can calculate the current value. The current value will be 100,000 minus 20,000. Then you will have the current value of 80,000. Okay, then now because we have current value, we also have to pick recoverable amount. Remember, recoverable amount we have to take the higher one between fair value and value in use, which we find that between 50,000 and 60,000 the higher one is 60,000. Okay, we are going to recover 60,000 in this machine. Okay, now let's check if we have impairment. The value that we know, or the book value in our books that we know, is 80,000, but we can only recover 60,000 in this machine. There's a loss here because the value that we know that our assets worth is not the real one. The 80,000 is not the real one. The real one that we are going to recover is 60,000, which means that the difference between 80,000 and 60,000 is impairment loss. Is impairment loss. Our impairment loss is going to be amount of 20,000. 80,000 minus 20,000, it will give us impairment loss of 20,000. Then you debit impairment loss like you do when you do the journal for depreciation, and you credit accumulated impairment loss. Then you get 20,000. So that's how you should do the journal in case where you have impairment loss. Okay, so for this lesson, that's all that I have. See you